Have you ever heard people talk about a stocks and shares ISA and thought, I should probably understand that by now? Then this video is for you. By the end of this video, you will understand what a stocks and shares ISA is, how it works in the UK, and why people use it, without any jargon or hype. And just a quick note before we start, this video is for educational purposes only and is not any financial advice. Everything I talk about is general information and not personal recommendations. So let's begin. A stocks and shares ISA is a type of investment account that lets you invest your money without paying income tax on the returns. In other words, it's like investing for your future tax efficiently. An ISA is an individual savings account. The ISA is not an investment in itself, but it's a wrapper. It holds investments inside it, it shelters the investments from UK tax. The government created ISAs to encourage long term saving and investing for UK residents aged 18 years or more. Difference between investments outside versus inside an ISA. For investments outside an ISA, you pay income tax on the dividends, you pay income tax on the interest, you pay capital gains tax when you sell investments for a profit. For investments inside an ISA, no income tax on the dividends, no income tax on the interests, no capital gains tax on profits, no additional tax return paperwork. So if your investments grow over time, you keep all of that growth. Every tax year, you get an annual ISA allowance. The total annual ISA allowance for the tax year starting on 6th of April 2026 is £20,000. You can split it across different types of ISAs, but the total must stay within the £20,000 limit. This is a use it or lose it allowance. It resets every 5th of April, and unused allowance cannot be carried forward. A wide range of assets can be held within a stocks and shares ISA. Some examples are UK and international company shares, index funds and unit trusts, exchange traded funds or ETFs, government and corporate bonds, and so on and so forth. Basically, most mainstream investment products are available for investing. People often use stocks and shares ISA for investing for the future, building wealth over long term, 5 to 10 years at minimum, or even more. Having flexibility outside pensions as they can access their money anytime, bridging the gap before pension access age. Now, this is important. A stocks and shares ISA is not risk free. Some of the key risks are market risk. The value of investments can go down as well as up due to market fluctuations. Capital at risk, so you may not get back the original amount you invested. Time horizon. The shorter your time frame, the higher the risk. Investing is best suited for a minimum of 5 years to ride out any volatilities. No guarantees. Unlike a cash ISA, your balance is not guaranteed to stay the same. Stocks and shares ISA is not for short term investing. The longer you invest, the more time you have to ride out market ups and downs. Historically, long term investing has been far more stable than short term investing. This is why many people invest for at least 5 years or more. There are some myths around stocks and shares ISA, but most of these are not true. A stocks and shares ISA is not gambling. It is not day trading. You do not need to be an expert to use one. It's simply a tax efficient way to invest in mainstream assets. What are the key differences between stocks and shares ISA and pensions? Both stocks and shares ISA and pensions help you invest for the future, but they work differently. ISAs give you flexible access to your money. You pay no tax on returns, but receive no government top ups. Pensions you can only access when you reach pension age. You get tax relief top ups from the government, but your withdrawals can be taxed. Many people tend to invest in both. Here are some tips on getting started. You must be a UK resident aged 18 years or over. You have to compare platforms for fees, investment options, and services. Decide on a lump sum or regular monthly contributions. Consider speaking to a financial advisor if you're unsure about suitability. You can check the gov.uk website for official rules and provider lists, and also use independent guidance from Money Helper to help find a provider. We have reached the end of this video. If you found this helpful, hit like and subscribe. I've got more simple UK investing videos coming up. The next one will include a full breakdown of ISA versus pension. Thanks for watching, and I will see you in the next one. Bye.